All right, how's it going, everybody? Welcome back to this week's Stock Market Outlook video brought to you by DeepView. This is a platform that I use every day for alerts, analysis, research, all of that. You can get a special offer down below in the description right now. With that said, obviously today we've got a lot to talk about. Last week ended off with a big sell-off bar, and we're going to cover everything: markets, key leadership, themes to watch, all of that. So stay tuned, and if you do find this video helpful, please go ahead and leave a like down below. It helps me out immensely. And if you want to see more videos just like this one every single week, and I will be doing these every single week, definitely go ahead and click subscribe. All right, so with that said, let's go ahead and dive right in. Taking in the full context, this year has been a lot choppier, and it really started with this bar right here in December 18th. This is where, in my opinion, the market kind of shifted from a pretty strong uptrend, and especially in this period, in late fall last year, things were very strong. But then in the middle of December, we saw a big sell-off bar, and these type of bars are what I call base starters. And what they signify is pretty much a transition from an uptrend to likely the start of a consolidation, longer term choppy period. And that's exactly what we've seen on the Qs, and in many stocks as well have felt this. And if we think about last year and really the last 2 years, AI semiconductors have been kind of the driving factor of, the strongest theme in the market. And this kind of marked the transition away from that. We had some catalysts in here as well. Of course, the DeepSeek gap down, that's this right here. We also had tariffs, a change in administration. So a lot of changes has happened over the past 2 months. And that really is the fundamental drivers behind why the market feels different, why breakouts aren't following through as much, why earnings gaps aren't following through as much, why things are seeing more distribution. And it all kind of comes out on the charts. So you can pay attention to the fundamental drivers if you want, but at the end of the day, price tells all. And we've seen it in the charts. We've seen it in the market leaders, which have started breaking down Reddit, Nvidia, PLTR, seeing weakening signs, and we'll get to that in just a minute. But just again, it's very clear when we've got a nice trending environment and where swing trades and position trades will likely be working when we're above a rising 21 EMA. But when we're chopping around the moving average, there's a lot of gaps. There's a lot of these reversal bars here, island gap, gap down, downside reversal at this level, downside reversal, big sell-off bar. These type of price and volume characteristics that you want to recognize in the moment give you basically input about what type of environment we're in, and you have to make adjustments. I did an article in the Trade Lab, which is my service if you're not familiar with it, and I basically break down 4 characteristics to look for to recognize choppy markets in real time. And by the way, for the Trade Lab, I am doing a free month trial. If you're not already a member, you can check out the link down below the description, and you can read that article today. I think it's really, really good. The 4 adjustments I get into basically adjust your position sizing, how much you're trading, risk management. I tighten all of that up during choppy markets, and that helps protect your capital and make sure that the progress you make during these periods, you don't give it back in kind of the most dangerous time for traders. The most dangerous time for traders isn't a sharp correction, a big extended, correction. Really, this type of market, this chop, is the most dangerous, because if you continue trading like you were in here with large position sizes, being aggressive on breakouts, you're just going to get kind of a million small stop loss hits, and that will gradually erode both your capital as well as your confidence as well. So that's why it's so important to make adjustments during this period. And in that article, I outline all that and exactly what I do. So definitely check that out if you're interested. All right. But again, we've been in a choppy period. This Friday was kind of more of the same. I thought we had actually emerged from this choppy period with this breakout through this level, but we saw that kind of all change here. And really these past 2 days, this upside reversal and this upside reversal, we started to see weakening signs in leadership. PLTR will discuss, its action. It's been kind of the key leader that has, taken the reins after Nvidia dropped. And we'll get into that. I'm getting ahead of myself. So let's go ahead and go back to the indexes. So QQQ, back below the 21 EMA. Again, this type of bar often precedes more weakness. However, if we do early next week gap up and hold or sharply reclaim, that could suggest that, hey, this might be a little bit more temporary. But if we do see further selling below the 50 SMA, that would suggest, again, we need a longer term basing period to really work everything out that's going on right here and wait for leadership to develop again and set up and all of that. So we'll have to see what happens after this bar. That's what's critical. Do we recover sharply, or do we continue to sell off down here? And this wasn't just, only the mega caps that had sell-offs. You can see this in the equal weight QQQ, a large sell-off bar back to the 21 EMA. This has been trending well for a little bit here. It actually looks a lot better than the QQQ. But again, we saw the same action, big sell-off bar, and we'll have to see how this resolves. This is a failed breakout. You've got the base pivot right here. I'll actually go ahead and draw that in. And you can see we broke back below the pivot. So we'll see if we can reclaim that quickly. If not, likely we need a test of the 50 SMA in just a few weeks to, work everything out. And it's still so early in the year that actually a nice correction, which completely resets everything, I would actually welcome, because that would kind of, set up new bases, set up new opportunities, and set up a strong back end of the year. But this chop, I'd love to see us transition away from that. Again, this is the hardest time as traders. I know I felt it in my personal account. My past trades haven't been successful, so I've been scaling back all of that. But you got to protect your capital during chop and not try to push it too hard like you would during a strong, significant uptrend. Moving on to SPY. This looks very similar. Again, you've got the failed breakout and, that level here. Let me draw that in right here. So strong break below that level, testing that 50 SMA. And again, this bar is significant, and we'll have to see if we see further downside. For me, that's the expectation right now. But again, a hold above here and quick reclaim of the pivot would be a positive expectation breaker. But you can see this base starter bar again over here on the left-hand side with SPY. This always pretty much signals the change in conditions in both the market as well as individual stocks. You can go back in history. TTD is a really good example. Let me actually bring that up. Looking at the chart, you can see this base starter bar after the nice 2020 move, and nobody thought that this trend would be ending. This was a month. It was a leader during this time, and then we get this one day where we drop pretty significantly, down 10%, and break below the moving averages, and this ends up being the start of a longer term decline, I think down about 40% from this low pretty much, and basically the start of a 2-year base that it only emerged from a little bit and then went back and saw even more distribution. So this type of bar is something to take note both in individual stocks as well as the market, and just something to be aware of, that the trend could be changing, the trend could be ending, and you just want to always just take note of that price and volume characteristic. Moving back to the indexes, let's go ahead and actually take a look at IBIT, and we'll take a look at IWM in just a second. This, formation looks weak to me. We're now below the moving averages. We saw a downside reversal where we are actually acting and showing good relative strength late last week until this bar where we broke back below the moving averages. This level to me is pretty key, and we haven't been able to reclaim that. And we've seen downside reversal here and here against that level. And to me, I think a retest of this is happening, but we'll have to see, of course, what happens. But overall, this looks pretty weak to me. MDY breaking lower, IWM as well. So this is kind of a broad market sell-off bar. And I don't know if the catalyst is actually pretty well known here. I've heard whispers, rumors about a second type of virus coming out. We'll have to see what happens. But I'm not sure if the catalyst for this is really well known. But in essence, you don't really need to know the catalyst. Price is news, and this is telling you that there's more distribution, and that distribution will need time to resolve itself. Looking at the mega caps, this also gives you a good sense of things. These are actually acting relatively well. Apple, nice trend, but fade off highs here on Friday. Meta, acting really nicely, but breaking below the 21 EMA. It had been trending really beautifully above the moving averages here, but now we're breaking below the 21 EMA. The first close below that. Microsoft, you had the quantum news. That doesn't seem to be impacting the stock positively at all. Google also just in a downtrend, breaking below the shelf. Amazon breaking lower. Nvidia has been choppy. We'll take a closer look at this chart in just a minute. And Tesla also breaking lower, although this low is still intact so far. So this is the potential for to be a higher low, but obviously it has to hold and act well. But going back to Nvidia, I want to spend a little bit of time on this chart because obviously this was the leader for 2 years in the market, but now it's looking much more like a stage 3 where momentum is slow to the upside. We're oscillating above and below the moving averages. The 200 SMA has caught up to price. We're seeing gap downs, big downside reversal bars again, signs of distribution here, 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 and then here as well. We did rally since this gap down, the DeepSeek Catalyst gap down. But we're back below the 21 EMA, and after the short-term flag, the expectation would be, a push higher from this range. Instead, we had a big downside reversal, and how this acts now, I think, is key. We're at this key level where all the moving averages are converging together, and if the stock is under accumulation, it's to respect this area, bounce, form out here, form out this base a little bit more, and break out. But if it's still under distribution, and right now, lower high, and we'll have to see what happens here. If it's under distribution, likely a test of the 200-day is in order, and we might see a break lower from that, and this would be a key level to watch if we do get down to that area. But Nvidia just isn't quite the same stock it was during these momentum moves back here, and you don't want to get stuck in the past. You always want to treat stocks based on how they're acting right now. I think Nicholas Darver said there's no good, the only good stock is one that's going up, and if it's not going up, there's no reason to be, focused on it. I'm paraphrasing here, but that's pretty much the sentiment. Again, price is news, and price and trends are what is most important. So Nvidia, the key leader of the past 2 years and representative of the semi-AI theme, is just not acting too well, and we'll have to see how this bar in the very short term resolves and this overall pattern in the longer term resolves as well. But let's dive in now to the key themes. We've talked about the major indexes and the distribution we're seeing, as well as the mega caps, but let's talk about kind of themes in the market here. And this is my performance chart setup. Basically, I've got thematic ETFs that represent different groups and areas of the markets. And I basically plot on the left-hand side the percent change from the open on a daily basis, and then on a 20-day basis, the overall performance. So here on the right-hand side is kind of the existing leading themes near the top here, and lower down here are the weakest themes. And then over here is on a daily basis, what did the themes do? So this gives you a sense of the prevailing themes on the right, and then the potential developing themes here on the left-hand side. And right now we're seeing China act well. You've seen JD, Billy, Baba acting really well. Miners are up here. So really gives you a sense that, leading stocks aren't really growth stocks in this moment. These are kind of more secondary themes, cyclical themes, all of that. And even on Friday, Friday basically everything was distributed off the open, and we just saw more of the same. China acting reasonably well. And that's kind of the sentiment right now. Right now, growth stocks aren't really in favor and haven't been working out, and that's reflected in these performance charts, which is a really cool feature here of DeepView. All right, so with that said, let's go ahead and talk individual stocks. We brought up Nvidia early on, and I have these labels, these large reversals down and gap downs here labeled, and we'll see how this acts. And just the RS line, you can see it just hasn't been right, lower highs since this area right here. And let's talk some other key names. So PLTR, when the semiconductors and AI names start breaking down a little bit, software really took hold. We saw PLTR, Duolingo, app, continue to trend higher. And PLTR probably was the strongest name. You can see this beautiful trend here, recent earnings gap. And then kind of this day right here was the first sign of big weakness and something you want to, key in on to potentially adjust your trading and be more defensive. So when a day like Friday happens, one, you've got a plan in mind and know how to cut your stocks pretty quickly. But also you might be doing some aggressive selling into strength on days like this based on the action of the leaders. And that's a key thing to take note on. And this day right here, they lost a contract, I believe, I forget the exact catalyst, but they basically lost a contract in business, I think with the Army. But this type of bar to me is just a change in character. You have strong action since the earnings gap, and then the expectation is continue to trend or maybe base out and form out. Instead, we get a large downside reversal and retest of that 10 EMA, and then follow through gap down the next day, leading to a very sharp sell-off. And Friday, again, we're holding above this low for the time being, but it still doesn't just look right to my eye. You've got this large reversal, gap down, couldn't kind of recover that close, and then we see another downside reversal here on Friday. So again, we'll see how this builds out, but for me, this is a sign of weakness, and just kind of taking a look again at the market and characteristics to look out for. And I discussed this in the article. Recent gaps are a great gauge of the market health and the risk appetite of institutions. Names like PLTR, MNDY, Roku, these are names that have recently gapped up, and they held up and then they broke down. Bros, this one was holding up beautifully. I was watching this, and then it breaks down Friday. So when these names can't hold up well, these are the strongest relative strength names in the market. When they break lower and break these lows, that again is kind of feedback that you should key in on, that hey, the market isn't quite right, and we'll just have to kind of see how it resolves. But getting back to PLTR, again, since Nvidia kind of broke down, this is probably the key leader, especially in the software space. It's been on a tremendous 1,000% move since an early earnings gap way back in this area right here. But now potentially a changing character, and we'll see how it resolves. Maybe it just needs another base against the 50 SMA, or just recovers off the 21 EMA. But this is some weakness to take note of. And the other key leader since the semis and AI names kind of broke down a little bit has been in Reddit. And again, this has been in a very strong trend. And what happened recently, we broke below the 21 EMA, we broke below this base pivot, and we broke below the 50 SMA. And stocks under accumulation, don't quite do this. And maybe this just needs another base, and this is still very early on in its life cycle. So if it does form another base and set up, I think definitely still worth a focus and all that. But in a healthy market, this should be trending above the moving averages. And again, a sign of weakness a few days before what we saw Friday is something to take note of with Reddit and its weakness. Leaders lead the market, both to the upside and downside. So something like this is something to watch out for. And this was something that I noted and was cognizant of, and again, why I was lightening up a little bit over the past few days, even before Friday's action. So we'll have to see what happens with this. This is a key level I'm watching for potential reversal and start of a base, but just something that currently is in a short-term down cycle, and we'll have to wait until it at least regains that 21 EMA before it's actionable again. But this is a key leader, one of my best trades of last year, and definitely a name I'll revisit once it starts showing relative strength again and acting well. Moving on, I do want to cover a little bit of other key names. We talked about Bros. In a strong market, this would have just broken out of its range and never looked back. But we broke lower here Friday, so we'll see if we can reclaim quickly and see what happens. Unity Software. I also want to bring up this stock. This is another recent gap and is actually showing a little bit of relative strength. Very nice action here on the highest volume ever. But here on Friday, we saw a downside reversal, and for now, it's holding this HVC. And I actually did an article for the Trade Lab breaking this down. Again, if you try the trial, you can check that out for sure. But right now, just watching to see if this can hold up here and continue to act well and build out a flag while the market kind of starts to figure things out. But during a market correction and choppy and just strong pullbacks, you want to be noting and looking for stocks that are showing relative strength. And that's what I've done over the past weekend. I've looked at many different names from a variety of different themes. You want to keep an open mind about what themes could lead or what themes are acting well. And what's key is that you're not just looking for, 1 day relative strength. You're trying to look for persistent relative strength where stocks are holding above moving averages, trending nicely, consistently when the market is pulling back in hard. So don't just give up on a stock because it has one bad day during a correction. Keep an eye on it, and if it shows relative strength, over the majority of days, over 70% of days, 60% of days, that's a name to keep track of. If it's holding near the key moving averages when the market falls below, if its drawdown is contained within 10-15% while the market pulls back even harder, that's a name to be watching to see if it can lead once the market pressure comes off and we start a new uptrend. So that's just a few quick things on relative strength. And Unity Software, despite this action here on Friday, will be one that I'm just kind of continuing to track and see if I can gather evidence that it is showing relative strength to see if it can build out this flag and hold near this level. Because if you go to an intraday chart, and this is kind of how I look for intraday RS, it had a strong move up in the morning, and then with the overall market turning over, it pulled back hard with it. but it pretty much based out to end out the day. While if we look at the QQQ on a 5-minute chart, look at this downtrend that we saw into the end of the day. So something that holds up better than the market intraday, again, is a sign of relative strength, even if it did have a bad bar or fade off the highs. So just something to note. And Unity, I think, is a name to keep an eye on. And it's got that HV edge that does say that there's something special going on with the stock, but obviously it has to meet our SEP criteria. And most importantly of all, the market has to be right for names like this, earnings gaps, breakouts to work successfully. So just a name to keep an eye on there. Another name that I'm still watching, even though it did pull back below the pivot, is TEM. And the reason being, this is still relatively new merchandise where it could resolve itself and act well. And we have broken below this pivot, but I'm watching to see how it acts versus the 21 EMA and see if we can basically form up a base or tight consolidation right near these highs. This showed a lot of strength here after this gap up here and very significant trend, and just a name to keep an eye on. Also, the growth is pretty strong and the growth estimates are very strong as well. So definitely a name I'm watching here as well. Growl as well. This was kind of one more thing I want to touch on here. Over the past few days is another sign of potential weakness. We saw a lot of very explosive and kind of climactic type moves. Here with Growl, you had a big downside reversal after a significant run from all the way from 19 to about 60 in just a matter of days, and then a big downside reversal and resumption down. And HIMS is another example, and probably a key name worth mentioning as well, where we saw a nice expansion move up. We saw potential climactic action on very high volume, and then we have a gap down and down 25% in one day. This type of action isn't quite normal, and again, it's potentially a sign to be watching out for further market weakness. So overall, I think that's pretty much what I wanted to cover here today. Hopefully what I've said has been helpful. Let me know in the comments your thoughts as well. I'd love to hear your thoughts on the market health. But I think what's key right now is just to take everything day by day, note relative strength, see if the market can firm up quickly, and if not, just be prepared for more chop, potential downtrend, all of that, and manage your risk accordingly. And don't feel the need to press the button too quickly. Don't feel the need to be too aggressive too fast. These type of things take time when we do enter a correction, and the leadership will develop and show on our screens, holding moving averages, reclaiming them before the market, leading the market again. So we don't have to really guess. We just have to note relative strength every single day. So hopefully this video has been helpful. Leave a like down below if you enjoyed, subscribe if you're new to the channel, and I'll see you guys in future videos. Take care.